Now, the next chart I'm going to show you is a picture of the Dow Jones Industrial Average when I first started in the business in the late 60s. And you can see that from 1966 to 1982, that market went almost nowhere. It went up and down and up and down. We had inflation, we had major recessions, we had 15% interest rates, and this market just went back and forth. So if you were in an index fund, you wouldn't have made much money except for your dividend payment. But if you bought in the value zone, and I'm going to show you that a little more clear on the next chart, you would be able to make great returns even during a period where the major markets didn't make much moves. Now, the bottom part of this chart is what we are experiencing currently. And you can see the bottom in 2002, that's the first bottom. Then you look at the next bottom in 2009, and then you can see that movement up and down. Now, if you compare these two periods, you'll see how similar they are, where the markets kind of move back and forth and follow this pattern. Now, I want to make 2 points on this thing. If you look at the bottom in 1970, that's the top chart, it made a bottom, and then the 74 bear market, it made another bottom, and that market bottom discounted everything that you could throw after it. In other words, from 1974 till 1980, we had a terrible economic environment. We had runaway inflation, we had 15% interest rates, we had price controls, we had Nixon resigning. All of these things were going on, and that market continued to move higher and higher. Now, you see the same thing today. You have the 202 bottom, then you have the 209 flush out, and irrespective of what you hear in the news and what is going on, that market discounted all of these vents already and is going to continue to move back and forth until the next 3 to 5 years when all of these problems, or a large part of the problems, will be behind it. But this is the important thing to understand, is that when a market gets as cheap as it did, as in 1974, and in 2009, you can throw anything at it, it's not going to go lower. Everybody who wanted to get out sold. There were no more sellers. There weren't that many buyers, and that's what stops these bear markets. Now, I'm going to show you how to look at that and determine what level do you have to be where no matter what happens to the world, you can buy safely at these valuations. If you take a look at the 1974 market, it bottomed at 7.5 times earnings. What did we have there? We had inflation, we had price controls, and all of the things that people told me. Says, Arnold, there's no point in investing because my money is going to be worthless in the next 5 years. Well, not if you bought stocks, it isn't. And so you look at the 1980 recession. What was going on there? The peak of inflation, 17% interest rates. The market made a bottom at 8 times earnings and turned around and didn't look back for the next 20 years. You had one of the major bull markets. Now you look at 2009. We had the fear of deflation. We had 9% BAA rates. We had a horrific recession with the potential of many countries and banks going broke. And yet what happened? The market started moving up and really hasn't looked back in a very big way. And that is because at these multiples, it doesn't matter anymore, folks. You can discount the hereafter that. Now let's look at the next chart and show you something. And I worked during this period, and I remember that very well. Now look at it. If you look at that value zone, anytime you bought stocks at the value zone, you're talking about 7.5 to 8, 9, 10 times earnings. You had to move up. The first one was 31%. The next one was 50%. The next one was 74%. The next one was 22%, 34%, and 37%. It didn't matter what was going on as long as you bought stocks in that particular area and you got those kind of returns. You could sit back and somewhere in the future, you were going to get a good return. And that's the message we have today. You can see whether we're expecting inflation or deflation, and we can debate about what it's going to be. But if you buy it right, you're going to be rewarded. It's not going to feel comfortable. You're going to have sweaty palms, but that is the kind of markets that reward you for looking beyond the current problems.